Hello traders and welcome to another video review. Today is Thursday, Jan 2nd, 2022. Let's find out what is going on the Forex calendar. Retail sales data from Australia had been released overnight and are in line with the expectations, 0.9%. Trade balance data beats the expectations towards 10.49 billion Australian dollar, which is better than 9.3 billion forecast. During the London session, we got some kind of speeches from German Buba Vermelink, 10 past 10, because of course there was still G7 meeting in progress, so plenty of speeches from Christine Lagarde and the Buba, the ECB officials will be still present to the end of the week. We got the OPEC meeting as well at noon, but during the New York session we got plenty of other data scheduled for release, like ADP non-farm employment change, non-farm productivity and unit labor costs. All of this data are scheduled in the beginning of the New York session, and we will see whether the ADP non-farm employment change will beat the expectations of 300,000 people. So very interesting. Initial jobless claims are scheduled for release at 2:30 as well. Factory orders and crude oil inventories are scheduled for release at 4 p.m. and 5 p.m. respectively. And then of course we got some speeches from the other Buba people, and the FOMC member Messner will give a speech at 7 p.m. So pretty much busy day, especially the New York session, and we should definitely take a look at SP500, US dollar index and euro dollar because of this data here that are waiting for the waiting to be released. So let's start with the retail sales data from Australia and see how that impacted the chart. Daily time frame chart of the Australian dollar is showing something very interesting here. We have a pin bar that is apparently made at the end of the up move, and just below the 50% of the Fibonacci retracement. The high was made at 7,231, so there's only 12 pips miss to the 50% of the Fibonacci retracement. So temporary, I will just put my ABC pattern top here. Let me just there you go, change this. ABC to the upside is done, and now we should see some sort of the retracement towards 7,100 and 7,000 pips. Please notice the fact that despite the very interesting yet unconfirmed pattern on the Australian dollar and the positive, not that strong but positive momentum on the daily time frame chart, this stop here might still be, of course, invalidated if the next day's candle will close above the 7,231 pips, which is the high of the pin bar, right? So we got kind of a pin bar in form of a like a doji candle, which usually informs us about the possible reversal coming to this market. However, it's yet not confirmed. Okay, so the outlook remains a little bit changed. ABC completed, we are waiting for the confirmation, and then the probability of the market moving lower towards 7,000 pips is way higher. So let's find out what's going on the euro dollar. The euro dollar, after the yesterday's decline towards the key technical support, as indicated by me here, this key technical support is located at 106.43. We have a reaction after the test, a slight bounce. We are testing yesterday's low. Yesterday's low was 1.0679. Right now we've made 1.0683, so this is a 4 pips breakout. However, we didn't close above this level yet, so we are testing yesterday's low. If there is no reaction from the bulls, then bears will push the prices lower, and the reason for that is because we are on the 50% of the on the 50 points on the RSI, which means we are now exactly at the level of 1.0643 on the neutral side of the market. So neither bulls nor bears are in charge of this market. However, in the short term, in the larger, in the long term, on the larger scale, of course, bears are still in control of the market of euro and dollar. So we are still observing 1.0643 and the 1.0681, the yesterday's low. We will see where the breakout will be, to the downside or to the upside. I think that the data from the US might trigger some kind of a increased volatility. What's going on the US dollar index? US dollar index broke above 102.35, so this scenario has been invalidated and we have a bounce. Let me just zoom out to see what is going on here. Okay, so we have a bounce, and this bounce is more than 4%, I guess. No, it's more than 3%, apparently. This is 3.55%, which is kind of a good, nice correction, kind of a big as well. However, we didn't test the 189 level. Breakout above 102.55. We closed above this level. So in that situation, the momentum is on the level of 50. So this might be just one off bounce, and we might return to this down move. Okay, so what might happen here, I think, and it looks like we are still making ABC 1 2 1 2 3 4 5. Okay, we might be still making the ABC correction where the wave B or when the wave A might not be even completed yet. Okay, wave A might not be even completed as long as we trade below. Let me just put it on the chart. As long as we trade below the level of 103.16, the low of the wave A might still be moving lower. Okay, because it looks like we are missing the wave 5 to the downside, and in that situation wave B would be, of course, the wave 4. So that wave 4, wave 5, then the low for the wave A is in place, then the reaction in the wave B, and then C. However, might be a little bit too much concern about the little things here, and apparently this might be the end of the down move. However, please be aware of the fact that if today there will be some sort of the bearish engulfing pattern, piercing pattern, or any kind of a trend reversal pattern, we will likely have a top for this short-term bounce. So that's my outlook for the US dollar index. Let's find out what is going on the S&P 500. The S&P 500 is trying hard to break above the key technical resistance and the supply zone, 4,137 points, and so far they did, but they failed. They failed to rally higher yesterday, and 2 days ago they've been trading around this level, 30 points higher. However, the close was below the upper supply line, and then yesterday we closed even lower. So again, the same situation as it was on the previous markets. We broke above the level of 50, rallied a little bit towards the 53 points on the RSI, and then we back towards the neutral level of 50. So the momentum is now neutral. We are not in favor of bulls, no bears. So very interesting situation. Who is going to win this bounce, this battle for the upside rally? It looks like today's data from the US labor market and of course the other remarks from the G7 summit might get some kind of volatility to the markets, might bring some volatility to the market, and we might have a winner here during this bounce here from the lows of 3,811. So please keep an eye on the zone. It's still active. There is still plenty of going on here on the SP 500 supply zone, and we need definitely we need a breakout higher or lower in order to confirm the breakout or to fail this bounce here and then move towards 4,000 points again. And last but not least, let's take a look at Bitcoin. Daily timeframe chart of a Bitcoin is showing a sign of a weakness as the market returns to this consolidation zone here. This consolidation zone, let me just update it. Let me just move some levels because we need to update it after the market come back to the zone. Now the zone is wider. Now the zone is way wider than it was, and this zone would be somewhere, there you go, somewhere around, let's say this one, maybe even that one. Okay, so this one is not really necessary here. There you go. This is now the zone. I will just zoom out a little bit in order to move my my channel a little bit up. There you go. The upper boundary and the lower boundary is going somewhere there. So now this is the current zone adjusted to the newest information, and as you can see, despite our scenario, the market is back after the breakout. The breakout failed to hold on, and the market is back inside the zone. The zone is between 27,929, 31,437 now, and we are trending back inside the zone. So the market rally, the previous market rally failed, and this scenario for a breakout is still possible. However, we just opt for the higher levels. We just want to see now for a potential breakout to the upside, the level of 34,290 as the level that must be broken to confirm the breakout. So any trend line here, the blue one, and a blue trend line, maybe some sort of the channel. Let me find out if there is something for us in the terms of the channel. We might leave it like here. Okay, and look what's happened. Look what's happened here. This is a very, very, very important level. This is a very, very important situation if the markets gets there. Okay, so I think that you know what I mean. So far nothing happened like this. It looks like after this big sell-off yesterday, we will be continuing either below straight on towards 27,929, or at least we will just go trendlessly for quite some time, and we will end up still trading inside of this trading range. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.